Good evening, good evening everyone. I'll be talking about the borrowing profile of these major housing finance companies. I will also be touching upon the lending mechanism of National Housing Bank. I will also talk about the loan to value ratio and income to installment ratio of major housing finance companies. And at last we will look at the fixed and floating rate nature of lending and borrowing. This is a list of major sources of finance which is availed by housing finance companies. The first one is bonds, second one is debentures, third one is term loans from bank, fourth one is fixed deposits, fifth is loans from promoter bank, sixth is commercial papers, and lastly it is National Housing Bank. National Housing Bank is the major source of finance for all the new and existing housing finance companies. In order to facilitate priority sector lending and rural sector lending in India, National Housing Bank provides loans to housing finance companies at a rate which is lower than the market rate. With cheap cost of funding comes tight regulation like keeping a cap of 2% on interest rate which is given by housing finance companies. The housing finance companies which are already developed into this segment feel that this cap of 2% is insufficient compared to the risk that they are taking by lending money to the niche segment to the customers that live in tier 2 and tier 3 cities of India. Due to this very reason, the amount of borrowing that is taken from National Housing Bank is substantially reducing in the total borrowing portfolio of these two major companies, GRUH Finance and REPCO Home Finance. As you can see that the total National Housing Bank's borrowing in the total portfolio has been substantially reducing in the past years, that is January 2013, January 2014 and January 2015. Next. As we all know that loan to value ratio is a very important component in lending business. The average NTV ratio of housing finance industry is around 62%. This simply means that if a customer takes a loan of property is worth rupees 10 lakhs, then the bank housing finance company will only lend 6.2 lakhs rupees, whereas the remainder amount will be paid by the customer in the form of down payment. Secondly, the income to installment ratio of this industry is around 50% in India. This means in the sense that if the monthly mortgage payment is around 6,000 rupees, the customer must at least earn rupees 12,000 rupees in order to qualify for the loan. Low LTV and high down payment is an excellent combination which facilitates margin of safety for housing finance companies and also commits the customer to pay back the loan that they have availed from the housing finance company. In India, the average housing loan age is around 15.75 years. And the average borrowing of housing finance companies from various sources is around 9 years. Due to this mismatch and long-term nature of housing finance loan and medium-term nature of borrowing of housing finance companies, there is one interest rate risk. In order to eliminate this risk, housing finance companies lend to its customer on a floating rate basis, so that when the interest rate in the economy changes, they can reprice their loans, which in turn eliminates the interest rate risk at a very great extent. The remaining part of this presentation will be continued by my teammate Vishal Gulran.
Hello friends, now let us look at the loan approval process which takes place in the industry. First of all, it is the responsibility of the branch office to originate and to collect the loan, to collect the payments of the loan which are given to the